All right, good morning, everybody. Thank you for attending this Ichimoku Trading Strategies webinar. I would like to thank Idea School and Bukaka for making this possible today. Just to introduce myself a bit, I am Charmaine Feria. I'm a contributor at bukaka.com. I'm known as Simple Trader. I will give you access to my charts after the webinars. I'm also a member of Stock Market Pilipinas, where I moderate. I am a chartist and I have been trading the market for the last 10 years. Throughout this trading journey, I tried many kinds of trading strategies. I tried Elliott waves. I tried the Dow theory. I tried using simple moving averages. All these have their own characteristics and their own benefits, but I find that the most effective among these trading strategies that I've used so far is the Ichimoku trading strategy. So today we have the opportunity and privilege to talk about the Ichimoku Kinko-Hayo, its different components, and how they come together to point you in the direction of profits. So let's begin. So are you a new trader who is looking for a system to begin your trading journey? Or are you an experienced trader but would like to learn new ways of making money from the market? Well, today that opportunity is yours. The Ichimoku Kinko-Hayo is a tried and tested strategy that will leave you asking, why have not I learned about this system earlier? So let's talk about what this course is all about. Ichimoku Trading Strategies is a webinar that is made for individuals who are interested in becoming more effective stock market traders. It discusses and applies the Ichimoku trading system that will guide the learner in finding a trade setup that have a higher probability of success. At the end of the course, the student will be able to find profitable trades using the Ichimoku trading system, determine the best possible price levels to enter and exit trades, maximize the profits and minimize losses, and build confidence in trading decisions. So what will you learn today? The Ichimoku trading system, its components, and the effective utilization of tools for more profitable trades. Part 1 discusses the system itself and the concept of equilibrium. Part 2 discusses the components of the Ichimoku system. Part 3 talks about the Ichimoku signals. Part 4 discusses the trading strategies. And Part 5 uses Ichimoku with other tools. So today we'll try to finish from parts 1 until lesson 3 of part 4. So let's begin. Part 1, Ichimoku Kinko-Hayo. So what is Ichimoku Kinko-Hayo? Ichimoku Kinko-Hayo is a trading system developed by a Japanese journalist named Goichi Hosada. He spent 30 years trying to perfect the system, then he released it to the public in 1968. Hosada believed that the market action is a reflection on the dynamic of human behavior. This human behavior is based on the human being's tendency to move away and towards equilibrium in their lives. The system had been used extensively in Asian trading rooms and successfully used in forex, commodities, stocks, and other markets. But it did not become popular in the West until 1990s. So it is only in the 21st century that traders are beginning to understand the power of this charting system. Ichimoku is a powerful trend-based technical analysis method. Through its different components, it defines supports and resistances, identifies the direction of a trend, assesses momentum, and provides trading signals. So Ichimoku is best used for trending markets and is not as effective for ranging markets or those in a sideways consolidation. Ichimoku or Ichimoku Kinko translates to one glance equilibrium chart. Ichimoku means glance, Kinko means equilibrium, Hayo means chart. So one glance at the Ichimoku chart will give you an immediate understanding of the sentiment based on where prices are in relation to the Ichimoku components. This chart, for example, shows a strong downtrend, and then it shows a strong reversal to the upside. These Ichimoku components warn us that this reversal was about to happen several periods ahead. So Ichimoku answers many questions. What is the market sentiment? Is the market bullish or bearish? What about the momentum of the trend? Is the current trend strong, weak, or neutral? It also provides clues on the strength of the buy and sell signals. Are the buy and sell signals weak, strong, or neutral? Now, the Ichimoku chart provides a clear picture of how current prices relate to past, present, and future price action. The Chikou span references current price action with the past 26 days. So we find that this chart is bullish based on the past, present, and future price action. The Chikou span defined the support and the resistance. The Kumo defined the future price action. The Tenkan-sen and Kijun-sen tell you the supports and resistances in the present. So it is the only indicator that is both leading and lagging at the same time. So we will discuss all these more closely in the lessons that follow. Now let's talk about lesson 2, equilibrium. The markets are dictated by law of supply and demand. When supply equals demand, it is in a state of equilibrium. But sometimes, the demand is higher than the supply for a particular market. When this happens, the price shoots up because the sellers are less willing to let go of their shares, while the buyers are willing to pay more to get hold of those shares. When this market gets disrupted in this way, you get disequilibrium. Now, as price goes higher, there will be less willing buyers. Then there will be a surplus in supply. Prices will have to fall in order to restore the balance or the equilibrium between supply and demand. When price goes back down, the demand increases and the supply decreases again as the market eats into the supply at these lower prices. As a result, we have equilibrium all over again. In this chart, we see that prices have fallen in order to relieve the excess supply. As prices fall, the market will also tend to demand a higher quantity. The market again falls into a state of disequilibrium. Now, if that demand ends up higher than what the market is willing to sell, then we get a shortage in supply. As a result, prices will rise, and as price moves higher, the demand tends to decrease while the supply increases once again. Eventually, the market will find the level at which the supply equals demand in order to restore equilibrium. So the market goes back and forth between the state of equilibrium and disequilibrium. This is the backbone of the concept of Ichimoku Kinkuhayo. Now, an important facet of Ichimoku is that it is based on a set of rules. You have to follow those rules so that you're able to trade based on a system. The discipline keeps you from being emotional about your trades. Many times traders jump into moving trades without any plan at all because they did not want to be left out. They start buying when everybody else is buying, and they buy at any price and then cross their fingers that it will bring them profit. But that is not the best way to get into a trade. That is not trading. That is pure gambling. But if you have rules to follow, you would not have to fall prey to that. So as a trader, we must look for that profitable trade with the highest rewards at the lowest risk. This means that we do not enter every single trade opportunity. We should discipline ourselves to only get into the more profitable trades. But you have to have the skills and the knowledge to find these profitable setups. As Aristotle says, what lies in our power to do, it lies in our power not to do. If there's anything that the Ichimoku can do for you that will have a profound effect on your trading, it is to eliminate the doubt. By mastering the Ichimoku system, you are the master of your trade. You are able to look into the past, the present, and the future direction of the market. As William Shakespeare says, our doubts are traitors, and they make us lose the good we oft might win by fearing to attempt. The Ichimoku system is a stand-alone system. However, some traders would add a few indicators like Fibonacci levels to add conviction to their support and resistance levels, or they might also use the relative strength index to find divergences. Nonetheless, the Ichimoku trading system could be used without any other tools. Ichimoku works in all markets: the stock market, the commodities market, the forex market, etc. Now, it could also be used in different time frames. However, the higher time frame always is more reliable than the lower time frame. The support and resistance levels on higher time frames like the weekly and the monthly time frames are stronger supports and resistance levels than the lower time frames like the daily and the hourly time frames. Now let's go to part 2, the components of the Ichimoku system. The Ichimoku system has 6 components that work together to form a complete Ichimoku picture. These components are the Tenkan-sen, the Kijun-sen, the Chikou span, the Senkou span A, the Senkou span B, and the Kumo. The Tenkan-sen line is the pink line in the make trade charts. Note that these lines may have different colors in other charts. What we will use for this webinar are the charts from make trade. The Tenkan-sen is the pink line. It is the conversion line or the turning line. It is calculated by taking the highest high plus the lowest low of the past 9 periods divided by 2. The Kijun-sen line is the blue line. It is also called the standard line or the baseline or the reference line. It is calculated by taking the highest high plus the lowest low for the past 26 periods divided by 2. The Kijun-sen line is a very important component of the Ichimoku Kinko-Hayo system. The Chikou span is the green line. It is also called the lagging line because it is the current price shifted 26 periods back. The Senkou span A is also known as the leading or preceding line 1. To calculate the Senkou span, take the Tenkan-sen plus the Kijun-sen, divide that by 2, and plot it 26 periods ahead. Now the Senkou span B is also known as the leading span 2. It is calculated by taking the highest high plus the lowest low divided by 2, calculated over the past 52 time periods and plotted 26 periods ahead. Then we have the Kumo. The Kumo is also known as the cloud. That's the shaded area between the Senkou A and the Senkou B. The Kumo is one of the most important elements in the Ichimoku Kinko-Hayo system. Alright, so let's talk about each component one by one. Lesson 1, Tenkan-sen. The Tenkan-sen is the midpoint of the past 9 periods. From current period, we count 9 candlesticks back. Then we add the highest high and the lowest low, and then divide that sum by 2. So this is the highest high for the past 9 periods, which is 685. This is the lowest low of the past 9 periods, which is 566. Now this refers to the MCP chart weeks back. So the highest high right now, I think, is 844. So you compute for the Tenkan-sen based on the most recent prices. Right now, we're only showing how to theoretically compute for these levels. So your Tenkan-sen level is 685 plus 566 divided by 2, which is 625. The result becomes a point in the line that makes up the Tenkan-sen line. Now the Tenkan-sen line is like a short-term moving average because it is the result of prices average over a period of time. However, unlike moving averages, which take straight averages, the Tenkan-sen line takes the highest high and the lowest low only and gets the average of that. Moving averages, however, average all closing prices within its specific time period. Now, the Tenkan-sen line is the fastest of all the indicators. It provides the short-term support and resistances. If price is above the Tenkan-sen line, the short-term bias is bullish. The Tenkan-sen also shows the strength of the short-term momentum. The steeper the slope of the Tenkan-sen, the stronger the momentum. In this chart, the line is moderately sloped upward, showing moderate upward momentum. Now, if price is below the Tenkan-sen, the short-term bias is bearish. This chart shows the price below the Tenkan-sen. Therefore, the short-term bias is bearish. There is also a strong momentum moving downward. The Tenkan-sen's more important purpose is for use as a buy and sell signal with the Kijun-sen to create the TK cross signal. We will discuss more about that later on in this webinar. Now let's go to lesson 2, the Kijun-sen. The Kijun-sen is a vital part of the Ichimoku system. It is calculated at the midpoint of the past 26 periods. Here again is the chart of MCP. From the last day's candlestick, we count 26 periods back. Then we find the highest high. Here it is 685. Then we get the lowest low. Here it is 488. We divide that by 2. We add them and then divide them by 2. We get 587. So that again is a point in the Kijun-sen line. Here's the highest high and the lowest low. We add them and divide them by 2 to get a point in the line. Now the Kijun-sen tells you the medium-term bias of the market. If price is above the Kijun-sen line, then the medium-term trend is bullish. In this chart, price is above the Kijun-sen. As discussed earlier, the Kijun-sen is a measure of the price high and the price low for the past 26 periods and therefore is a good indicator of medium-term price equilibrium. If price is below the Kijun-sen line, then that means it is bearish because it is below the midline of prices for the past 26 days. In this chart, the price is below the Kijun-sen and is therefore medium-term bearish. Now the Kijun-sen also serves as short-term or as medium-term support line. When an uptrending stock consolidates and bounces off its Kijun-sen line, this means that the medium-term trend is still intact. The encircled areas are areas where price bounced off the Kijun-sen. For swing traders, this Kijun-sen line is a good price level to buy into the market. Now, once price falls below the Kijun-sen becomes the medium-term resistance, as shown in this chart. The Kijun-sen line is a built-in trend line. Now, prices trended below this Kijun-sen line and served as its price resistance. Now, on February 2017, the price reversed. The price crossed above the Kijun-sen line. This means that price is higher than the average of the last 26 periods and is now bullish. The result was a change in trend from downtrend to uptrend. Now here's that crossover of the price above the Kijun-sen line that resulted in a change in sentiment from bearish to bullish, and thus price action from downtrend to uptrend. Now the opposite happened in this chart. Price had been trending above the Kijun-sen line, and this line served as support for a few months, but on August 2016, price went sideways and then price dropped below the Kijun-sen line. While it was medium-term support previously, when broken, it becomes the medium-term resistance. Thus, the trend shifted from medium-term bullish to medium-term bearish. Now, here is that crossover below the Kijun-sen line. Now, from previous examples, we learned that Kijun-sen could also serve as your trail stop for uptrending stocks. In this chart, notice how prices trended above the Kijun-sen line. However, price later broke below that line, so that was the sell signal. The advantage of the Kijun-sen line over regular trend lines is that it adjusts with the market volatility. Unlike trend lines, which are merely straight lines connecting bottoms, the Kijun-sen is more flexible and is a more accurate trend indicator for prices. Now, the Kijun-sen tells you the medium-term momentum of the market. A steeper Kijun-sen line in an uptrend or a downtrend signals strong directional momentum. So the steeper the slope, the stronger the move. Now, when price enters into consolidation, the Kijun-sen becomes flat. A flat Kijun-sen shows low volatility over the past 26 periods. When the Kijun-sen is a flat line, it acts as a price magnet. Therefore, price would tend to come back to a flat Kijun-sen line. In this TD chart, notice how prices are away from the Kijun-sen line in this area of number 1. Prices were below the Kijun-sen. Now, in a downtrend where prices are low, demand increases. As demand increases, there is scarcity in supply, therefore price will increase due to this demand. In number 2, prices went on an uptrend. Eventually, there was excessive supply. The excessive supply happens when prices are too high that the demand at those prices decrease. It went on a sideways consolidation until Kijun-sen and price are able to meet. Currently at number 3, price is at equilibrium because it is attached to the Kijun-sen line. In this area, the Kijun-sen is flat and shows equilibrium. Now let's go to lesson 3, the Chikou span. Now the Chikou span is one of the most underutilized but more important aspects of the Ichimoku system. It is a time-shifted line because from the current closing price, you count 26 periods backward to get the latest point on the line. This helps us gain a clearer perspective of current price action with respect to the past 26 periods. This Chikou span helps determine the direction of the current trend. Here's an illustration. This is the current period. We count 26 periods back. Notice the number 26. We look down to find where Chikou span is. So is it above or below the price? The Chikou span is below the price. This is the price right now. 26 periods ago, the price was above that current price. So the Chikou span is below the price. If the current price is lower than the price 26 periods ago, then that would indicate that there's a strong potential for more bearish action to come, since price tends to follow trends. Now, FPH is bearish because the Chikou span is below the price and the current price is below the price 26 periods ago. Like we said earlier, price follows trends. So price is likely to keep going lower. That was the bearish scenario highlighted by the Chikou span. Now here's a bullish scenario. EDC in this chart or in this time period is bullish because Chikou span is above the price and the current price is above the price 26 periods ago. This is the Chikou span and it is above the price. We compare that to number 1, which is the current price. We see that it is higher than the current prices. Therefore, the trend is upward. Now, another function of the Chikou span is to define ranges. Let's zoom out of the FPH chart. Now, in every price chart, price tends to mark certain areas as its highs and lows. In doing so, it creates price ranges. The location of the common highs and lows make up the highs and lows of the Chikou span. So we just connect the common points to get a series of lines. Basically, if we're inside these Chikou span ranges, then we know we're consolidating. If price breaks above the Chikou span range, then we enter a new range. Now let's add in the lines in this next chart. So for example, you're in this price right now, the orange circle. Then we find the Chikou span 26 periods back. Where is the Chikou span? It's right here. It is right at the support line created by the historical Chikou span highs and lows. Since price holds above the support line but could not make higher highs above the Chikou span resistance, then we know we're in a range or we're consolidating. Lesson 4, the Senkou span A. Now the Senkou span A is used along with the Senkou span B line. Together, they form the Kumo, or the Ichimoku cloud, that is the foundation of the Ichimoku Kinko-Hayo charting system. The Senkou span A is another one of those time-shifted lines that are unique to Ichimoku. Now the Senkou span A is the average of the Tenkan-sen and the Kijun-sen line. We get the value of the Tenkan and Kijun-sen added and then divide that by 2. Then we plot the answer 26 periods ahead. So in this chart of SMC, the Tenkan-sen is at 103.2. The Kijun-sen is at 104.9. The Senkou span A is at 104.05. The value is plotted 26 periods ahead. Since it represents the Tenkan-sen and Kijun-sen, the Senkou span A is in itself a measure of equilibrium. Now the Senkou span A shows and measures the volatility of the market. this line will always be between the range of the Tenkan and Kijun-sen 26 periods ahead. This goes for the entire trend. So look at this Senkou span right here. It is right between the range of the Kijun-sen and the Tenkan-sen. So this area defines an area in the market where there is equilibrium. In this chart, notice how the Senkou span A plotted 26 days ahead or 26 periods ahead is right inside the range defined by the Tenkan and Kijun-sen. This is because Senkou span A is the average between those two lines. Senkou span A normally is never flat, while the Senkou B tends to be flat. Now, since price tends to trade off of the Senkou A and B lines on their own, now the real power comes in their combined dynamics or in the Kumo. In this Ichimoku chart, the Senkou span A is the blue line and the Senkou span is the violet line. These two in combination form the borders of the Kumo. Now, lesson 5, Senkou span B. The Senkou span B represents the highest high plus the lowest low for the past 52 periods divided by 2. The lowest low for SMC over the past 52 periods is 95.5 and the highest high is 108. The Senkou span B is at 101.75. Now this value is plotted 26 periods ahead. On its own, the Senkou span B line represents the longer-term view of equilibrium in the Ichimoku Kinko-Hayo system. The Senkou B is more likely to be flat and is therefore a magnet to prices because it defines a strong support and resistance over a longer time period. Now, the Senkou B line measures longer-term equilibrium. So this lets you know the future potential. This is the slowest of all the components because it uses 52 time periods. So if price has not made a new high or a newer low for the past 52 periods, we will have a flat Senkou span B line. If price is not able to make new highs or new lows for the past 52 periods, then we will see a flattened Senkou B. And a flattened Senkou B is also a magnet to price because this is a long-term price average. So if you see prices hitting these Senkou B levels, it would be a very strong support level, and that could be a trade in itself. You could buy at this level and sell at the bounce. Now, if you see the Senkou B line at the top of the price range, then you can sell off those levels and buy back at lower levels. You would see in this chart that the Senkou span B was at the bottom, and then the Kumo shifted, or the Kumo twisted. No, sorry, in the first area, the Senkou span B was at the top, the Kumo twisted, and then the Senkou span moved to the bottom. This shows a change in sentiment from bearish to bullish. Let's talk about the Kumo. Lesson 6. The Kumo is the shaded space between the two spans. The location of the Senkou span A and B in the Kumo determines the market bias. The thickness of the Kumo defines the strength of the Kumo as support or resistance. When the Senkou span A and B cross, you get what is called a Kumo twist. A Kumo twist signals a change in sentiment. When the Senkou span B is on top, and the Senkou span B is at the bottom, the sentiment is bearish. Now this example shows a bearish Kumo. In this area, notice how the Ichimoku elements are also below the Kumo, including the price. Now when the Kumo makes a twist, the color also changes. In this particular chart, based on make trade, the bearish Kumo is violet and the bullish Kumo is pink. Now when Senkou span A is on top and Senkou span B is the bottom, the sentiment changes from bearish to bullish. In this chart, the bullish Kumo is pink. Now flat tops and bottoms are strong support and resistance levels. Often the market bounces off these levels and then goes the opposite way. So you find the flat Senkou B at the right. If prices are able to reach those levels, it will be a good bounce off point. But mainly in this particular example, what we are showing is the Kumo twist, or the change in sentiment from bearish to bullish. Now every trend starts with a Kumo breakout. Bell made a Kumo breakout in October 2016 and then made an uptrend from then. If price is above the Kumo, we are bullish. If prices are within the Kumo, well, you could not see what is actually happening or what is going to happen because you're stuck within a range. You don't want to be inside the Kumo. You want to get above it, and you do not want to take trades that are inside the Kumo because that is a low reward area. In other words, when prices are inside the Kumo, you are stuck in a range and you're stuck in a sideways consolidation. So the bigger move comes above the Kumo. Now, if price is below the Kumo, we are bearish. Here's PX, which had been on a downtrend. We do not want to be below the Kumo because this is a bearish environment. The downside in this area is higher than the upside. So do not trade stocks that are below the Kumo. Now the thickness and the thinness of the Kumo also defines the volatility of prices. A thick Kumo is a stronger support and resistance area, or has higher volatility than a thin Kumo. The Kumo identifies the current and future areas of support and resistance. Remember that supports and resistances are not specific levels, but are areas or zones. So the thicker the Kumo, the stronger that Kumo serves as support or as resistance. This shows a strong resistance because the Kumo is above the price, and the Kumo is very thick. This means that price will have to work harder to break out of this Kumo, and thus the chances of a breakout are low. Now, if you have a thick Kumo, you expect high price volatility because the distance between the Senkou A and B is very wide. Therefore, price will try to oscillate between those two spans. The Kumo area is thus essentially a trading range. So prices will tend to go back and forth within that area, and that has no clear direction. Now, this is an example of a thick Kumo. Alco has a thick Kumo under its prices, and therefore is strongly supported by the Kumo. MVC shows weak support and resistance. At this point, MVC is at the bottom and it shows a thin support area because the Kumo is very thin, or it's a weak support area. Now let's go to the Ichimoku signals. Part 3 Ichimoku signals tell us the action that we're supposed to execute based on the Ichimoku signals. These tell us whether we're supposed to buy, sell, or to hold our positions. So what are the signals that we could trade off and profit from? The Ichimoku Kinko system gives you 5 kinds of signals. They should never be taken in isolation, but considered in the context of the overall chart and with regards to the relationships between all the components, including the price. Remember that Ichimoku Kinko is useful in assessing trend strength and trend reversals. However, trends can and do change, so your readings of the charts should be taken as a probability rather than as a certainty. So the signals could be classified as strong, neutral, or weak, depending on their location with respect to the Kumo. The strength of the signals could also be further strengthened, weakened, or nullified by the relationships between these components. When used in a trending environment, such as in a sideways trend, Ichimoku is likely to produce frequent conflicting signals. Now here's the first signal, the Tenkan-sen crossover signal. This occurs when the Tenkan-sen crosses the Kijun-sen. The first of if the price or if the Tenkan-sen crosses above the Kijun-sen, a bullish Tenkan-sen crossover occurs. When this happens, buy. Here's an example. The Tenkan-sen cross signal happened below the Kumo. This was a buy signal, and this resulted in a strong price action for MCP. Now, a strong bullish signal happens when the cross is above the Kumo. With a strong bullish signal, prices are likely to trend up on strong momentum after the crossover. Now, this is the strong bullish signal for MRC. After the crossover at 178, here, price went up almost vertically to 238 and then to the 48 high. Now, a neutral bullish signal is produced if the signal happens inside the Kumo. You see this crossover with the pink line crossed above the blue line? That is a neutral bullish crossover signal. This chart of Bloom shows a crossover inside the Kumo when the price closed at 633. Because the signal was neutral, prices hesitated and retested the bottom Kumo, then made a strong breakout above the Kumo. Compared to MRC previously, prices went up straight away after the strong bullish signal. In this chart, since the price, the Tenkan-sen crossover happened inside the Kumo and we have a neutral bullish signal, prices hesitated, it retested the previous low before it broke above the Kumo. So a break above likewise created a strong uptrend. From its crossover price at 633, Bloom rose to 7.9 and now is at the 9 peso levels. So what's the next? We have the weak bullish signal. A weak bullish signal is a cross that happens below the Kumo. If the Tenkan-sen crossover happens below the Kumo, we have a weak bullish signal. EDC made a weak bullish signal at the close of 526 on January 2011. After this, it moved sideways within the Kumo, and this happened within a period of 2 weeks. Eventually, it broke out of the Kumo top, but it did not make a strong uptrend. It retested the Kumo once again as support, and then resulted in another uptrend. Notice how the stronger bullish signals are able to move onto a strong uptrend after the crossover, while those with neutral or weak bullish crossovers have to consolidate sideways and retest support before resuming its uptrend. So you notice the difference between MRC, Bloom, and EDC. MRC made a strong uptrend because the signal happened above the Kumo. Bloom made a moderate uptrend because the signal happened inside the Kumo, while EDC did a weak uptrend, but it's an uptrend nonetheless because the signal happened below the Kumo. From a closing price of 526, price consolidated, retested support, it broke out, it retested again, and then it made an uptrend. But again, it retested the Kijun-sen level once again. Now, to summarize our lesson on Tenkan-sen bullish crossovers, a bullish signal occurs when Tenkan-sen crosses from below to above the Kijun-sen. A strong bullish signal is produced if the signal happens above the Kumo. A neutral bullish signal happens when the signal happens inside the Kumo. A weak bullish signal is produced if the signal happens below the Kumo. Now let's talk about Tenkan-sen bearish crossovers. A bearish signal occurs when the Tenkan-sen crosses from above to below the Kijun-sen. When this happens, sell. This is the web chart. It produced a bearish signal when the Tenkan-sen crossed from above the Kijun-sen to below the Kijun-sen. After this, prices dropped dramatically, and the price crossed below the Kumo confirms this bearishness. Now, a strong bearish signal occurs when the cross happens below the Kumo. With a strong bearish signal, prices are likely to continue on a strong downtrend after the crossover. This is the bearish signal for BC. Now, a neutral bearish signal is produced if the signal happens inside the Kumo. This chart of Fen shows a neutral bearish signal when the Tenkan-sen crossed below the Kijun-sen inside the Kumo. Again, notice that stronger signals or stronger bearish signals result in a stronger downtrend, and weak bearish signals result in a downtrend as well, but mostly in a sideways to downward fashion or in a slow fashion, whereas strong bearish signals result in a strong downward action. Now, this is a weak bearish signal. It is produced if the Tenkan-sen crossover happens above the Kumo. In this chart, we see a bearish signal above the Kumo. This resulted in a sideways movement, but later on, prices were able to bounce above that Kumo. So the weak bearish signal may or may not result in a drop in prices because this signal happened above the Kumo. This might be a temporary or short-term price correction, And if Tenkan-sen is able to make its way above the Kijun-sen once again, then that move is invalidated. Now to summarize, a bearish signal occurs when the Tenkan-sen crosses from above to below the Kijun-sen. A strong bearish signal is produced if the signal happens below the Kumo. A neutral bearish signal is produced if the signal happens inside the Kumo. A weak bearish signal is produced if the signal happens above the Kumo. Well, let's talk about the next Ichimoku signal, the Kijun-sen crossover. This occurs when the price crosses the Kijun-sen. A bullish crossover happens when price crosses above the Kijun-sen line. Here's examples of bullish crossovers. A strong bullish signal occurs when the cross is above the Kumo. This is the chart for Pacifica. As long as price stays above the Kijun-sen line, this is still medium-term bullish. Note that Pacifica made a rally last Friday to 65 cents and is currently in a pennant pattern, but we'll talk about patterns in other webinars. Nonetheless, the strong signal above the Kumo resulted in strong price action, or above the Kijun-sen resulted in strong price action. Now this is a neutral bullish signal for Metro Pacific because the price breach above the Kijun-sen happened inside the Kumo. After this action, there was a slight sideways action and then a move up for MPI. Now this is a weak bullish signal for CHP. Price went above the Kijun-sen in this area, made a short rally, and then dropped once again because the signal is weak. It's weak because it happened below the Kumo, and as we know, the Kumo is a strong resistance. So this decreases the chances of prices breaking out. Once the price breaks above the Kijun-sen, it still has the Kumo to contend with. Now to summarize, a Kijun-sen bullish crossover happens when price crosses from below to above the Kijun-sen. A strong bullish signal happens if the cross is above the Kumo. A neutral bullish signal is produced if the cross happens inside the Kumo. A weak bullish signal is produced if the cross happens below the Kumo. Let's talk about Kijun-sen bearish crossovers. A bearish crossover happens when the price breaks below the Kijun-sen. RFM made a strong bearish Kijun-sen crossover when the price went below the Kijun-sen. As this happened, the price was also below the Kumo. So if the price crossover below the Kijun-sen happens below the Kumo, then we have a strong bearish signal. This is strong because there is no Kumo preventing the price from going downwards. The Kumo support was already broken. Therefore, you can have a free fall because there's no support underneath. There's no Kumo to catch the fall. Now, Dimple made a neutral bearish Kijun-sen crossover when price went below the Kijun-sen. However, this happened inside the Kumo. The result was a sideways action. Now, a weak bearish signal happens when price breaks below the Kijun-sen while it is above the Kumo. This is B at around the 70 levels. B just made a rally towards the 99-cent level. So, in effect, this bearish crossover below the Kijun-sen was invalidated because it was a weak signal. And that signal happened above the Kumo. So, weak bearish signals tend to be invalidated. Weak bullish signals also tend to be invalidated. because you have the Kumo as a support level and as a resistance level during those crossovers. Now to summarize, a bearish signal occurs when the price crosses from above the below to below the Kijun Sen. A strong bearish signal is produced if the crossover happens below the Kumo. A neutral bearish signal is produced if the crossover happens inside the Kumo. A weak bearish signal is produced if the crossover happens above the Kumo. Now let's talk about our next topic, the Chikou span crossover. This is the third of the 5 signals. This occurs when the Chikou span rises above or falls below the price. Remember we said earlier that the Chikou span defines ranges. So if the Chikou span is able to break above the price range, then that's a breakout. It's a bullish breakout. If Chikou span breaks below the price range, then we have a bearish breakout. So here's an example of a bullish signal, a strong bullish signal. The Chikou span crossed above the prices in this PNX chart. Sorry, let's go back. As a result, prices were able to break out and make a strong trend to the upside. This is a strong bullish signal because it happened above the Kumo. Therefore, there are no resistances to stop prices from going up. Now, a neutral bullish signal happens when the crossover of the Chikou span above price happens while the current price is inside the Kumo. When we say price is inside the Kumo, we're talking to the current price. Now, this current price refers to that crossover 26 periods back. So when that crossover happened, the price was still inside the Kumo. So this was a neutral bullish signal because you still have the Senkou B to break for a successful breakout. Now we have a weak bullish signal if the Chikou span crosses above the price while the current price is still below the Kumo, because it still has to break above the Kumo resistance. So this may or may not result in positive price action, but note that you still have to break the Kumo for a bullish breakout, for a strong move upward. Now here's your bearish signal. A strong bearish signal happens when the Chikou span crosses below the price and the current price is below the Kumo. So there's no support under that price. So this could break down because there's no Kumo supporting it. A neutral bearish signal happens if price is inside the Kumo. Notice that the Chikou span went below the price at the left, and at the right side, the current price is inside the Kumo. So this is a neutral bearish signal. A weak bearish signal happens if the price is above the Kumo. Boom's Chikou span went below the price. However, the current price was still above the Kumo. So that bearish crossover was invalidated and price made new highs. It's currently at the 9 peso level. And this bearish signal was invalidated because there's a strong Kumo to support the price. Now what's a Kumo breakout? This happens when price crosses above or below the Kumo. A bullish Kumo breakout happens when the price breaks above the Kumo. A bearish Kumo breakout happens if price breaks below the Kumo. Now, the thicker the Kumo that is broken, the stronger the price move. Here's an example. A bullish Kumo breakout happens when the following conditions are met. Number one, Price breaks above the Kumo with a single candle. 2. Price closes above the Kijun-sen. 3. There's a bullish Kumo twist. 4. The Chikou span is above the price. And 5. The Tenkan-sen makes a bullish crossover. So in this chart, we can see all the elements that we previously studied, all the signals together in one chart. In this DNL chart, we see all these bullish signals together while the price is above the Kumo. So this resulted in a strong breakout for DNL. So this is a bullish Kumo breakout. Now we have a fill web here. Now this is a bearish breakout for the Kumo. These are the conditions for a successful bearish breakout. So when we say successful bearish breakout, prices trended strongly downward. This will work well for traders who are able to trade downtrending markets or who are able to short the market, which is not available in PSE right now. Perhaps if you're trading the Forex, commodities, or the Dow Jones, or the Forex market, you will be able to find some use for this bearish breakouts, but currently, we are not allowed to short the market yet. As of now, we can use this as a signal to sell if we are if we are doing position trading in an uptrending stock. If you see that these bearish signals happening in your chart, then it's time to cut your losses. So first condition for a bearish breakout, for a successful bearish breakout, price breaks below the Kumo with a single candle. Price breaks below the Tenkan-sen. There's a bearish Kumo twist. And the Chikou span is below the price. There's also a Tenkan-sen bearish crossover. This is where the Tenkan-sen breaks below the Kijun-sen. And this is a bearish Kumo breakout because prices fell below the Kumo. Now, Kumo twist occurs when Senkou span A and B change positions. Kumo twist signal a change in sentiment. You will find Kumo twist 26 periods ahead of price action. So this gives you a roadmap of where the market is likely headed. It also tells you the timing when your particular holding is about to change in sentiment. For example, if you see this bullish Kumo twist happening 26 periods ahead, you will be able to position yourself at the proper levels. Or if you are feeling bearish about the security and then you see a bullish Kumo twist happening, then you must change your sentiment from bearish to bullish because the price action is telling you that this price is about to break out. So this bullish Kumo twist showed a sentiment, a possible change in sentiment from bearish to bullish for Bell when this happened at the 3 peso levels. So who would have known, if not for the bullish Kumo twist, that Bell would now be near 5 peso levels? The bullish Kumo twist tells you that. It tells you to prepare for a change in sentiment. And if you were able to see this twist, for example, it's your 26 periods back, you would find this twist 26 periods ahead. So you already know that a possible uptrend will happen if you look down on November 2016. So you're able to establish a timing already. You look down on the price, you'd find that there's a change in sentiment starting November 2016. So this is the chart for brown. This was previously. We saw a bearish Kumo twist happening in brown. And prices continued to consolidate below that. Later on, prices made another twist, which signaled the change in sentiment from bearish to bullish. And now, brown is at 113 levels, whereas last March, it was at the 90 levels. Now, let's do a case study. This is a more specific case study on MCP. Now, let's imagine that we are way back in July 2016. Now, at this point, we have not heard of the Ichimoku trading system. In July 2016, we are at the start of the consolidation box for MCP, or Melco Crown Philippines. Since you have not used Ichimoku at that time, your MCP chart would probably have looked like this. You had the candlestick chart, you had the RSI and the MACD, you also had the moving averages. So in July 2016, you bought MCP at this price point because you saw that prices were making higher lows and that it had been making higher highs. However, in the following days, price stopped moving up and started to go sideways. You realize that you are stuck in this consolidation box. You have no idea where MCP will be going in the short-term or medium-term future. The moving averages gave 3 bullish crossovers. Now, a bullish crossover happens when the short-term moving average crosses above the longer-term moving average. In this case, the green line is the short-term moving average, and the yellow and red lines are the longer-term moving averages. We see that the green line crossed above the yellow and red lines. So this was bullish. Each of these bullish crossovers were buy signals within the box from July to October 2016. Now, each time it made that buy signal, you thought that this is it. This will probably resume its uptrend, and you will finally be able to get out of the trade with profit. Sadly, prices remained in a sideways motion for the next 7 months. Now, RSI also remained range-bound. The question on your mind was, until when will I have to hold this piece of baggage? Finally, after the long wait, MCP made a bullish crossover once again. Now here was the bullish crossover. This was number 4. You finally assumed that this will again be a false signal. You thought this was another one of those false signals, and you do not want to stay any longer, so you want to take this opportunity to get out of the trade, at least at break even. And you felt a sense of relief that this crossover is happening. So shortly after selling, price broke out. You hesitate to buy back because on its price breakout, there was no RSI breakout. In fact, there was a bearish divergence on the RSI. Now, a bearish divergence is when price makes higher highs and the indicator makes lower highs. Normally, a bearish divergence tells you that the price move will not be sustained and there will be a price reversal to the downside once again. So this signal conflicted with a breakout. This was a bearish signal that conflicted with a bullish breakout. Now there's another signal that conflicted in this picture. There is also a bullish hidden divergence. Now a bullish hidden divergence happens in a trending market that signals that prices will continue to go up. Here's your bullish hidden divergence. The RSI made lower lows and price made higher lows. This signals a continuation in trend. So which is it going to be? Will the bearish divergence win over the bullish divergence, bullish hidden divergence, or the opposite will happen? So you're conflicted at this point. You don't know whether to buy despite the breakout, so you just give up on it. Since you don't have clear signals, you just let the trade go. In this confusion and hesitation, the MACD could not give clear signals as well. It went back inside, above and below the signal line went above and below the slow line. So you have no clear direction by the MACD. This might have resulted in whipsaws for some traders who follow the MACD. Now this was the area where this confusion happened. So you don't know whether price will break down or break out. Luckily for the bulls, this resulted in a price breakout. In this chart, we use traditional indicators and moving averages, but these were not able to convince us to get into the trade because they had conflicting signals. We did not know which signals were stronger. We could not predict the future sentiment of MCP using those indicators. So you missed out on the entire trade. Now let's take a look at the same period on the MCP chart using Ichimoku. You bought here. This was the level we highlighted earlier in the previous chart. You got stuck in this box. You sold here. And you got whipsawed. But you hesitated here. Again, we're referring to the previous chart, but we are only putting the prices and using the Ichimoku chart. Then you hate yourself from here all the way to 820. Currently, it's even at 840. I think it closed at 840. So you hate yourself even more. Now, in number 1, you bought here, but the Chikou span could have told you to sell because it made a bearish crossover below the price. You see that Chikou span breaking below the price? You got stuck in this box, but the Chikou span made lower highs and could have told you that the current trend is sideways. Notice the Chikou span making a lower high. Now in number 3, you sold here, but the Chikou span made higher highs and could have told you that this is a real breakout. Now you hesitated here, but the Tenkan-sen crossover above the Kumo could have told you that this is a strong bullish signal. Now you hesitated here. I'm sorry, in the previous, in number 3, you sold here. The Tenkan-sen crossover was below the Kumo, but this was still a bullish signal. Though it's not a strong bullish signal, it's a weak bullish signal. In number 4, you hesitated, but the Kumo twist could have told you ahead of time that the sentiment is now bullish. This Kumo told you that the bullish hidden divergence was stronger than the bearish divergence that you saw in the previous chart. So there's no conflict here. There's a clear twist in the Kumo. In number 5, you hate yourself here all the way to 820, but the Kijun-sen served as strong support and could have told you that this is medium-term bullish. Price held above the Kijun-sen, price held above the Tenkan-sen, showing strong momentum, medium and short term. Do you see the difference between using moving averages and using Ichimoku charts? So had you known how to use the Ichimoku chart from the start, you would have avoided all the drama that came with not knowing what the market would do. Now, Ichimoku tells you the following things. First, the current trend. Second, the box area is the same consolidation box in the traditional chart shown earlier. In Ichimoku, this range is defined by the Chikou span, the green line. The second is a trigger for the change in trend or the future trend. The Chikou span breakout and the Tenkan-sen Kijun-sen crossover above the Kumo told you the change in trend. Third, this is for number 2. The trigger for the change in trend is a breakout and the TK-KJ crossover. 3, the likely timing of the future trend is shown by the Kumo twist. It also gave you the timing. If you look below, you would know that the timing for that uptrend is in late February. 4, the strength of the trend that followed is indicated by the Tenkan-sen and the Kijun-sen support line. So Ichimoku is able to give you a roadmap for future prices as well as the timing for the change in trend. It lets you prepare so that you are able to accumulate shares as the Ichimoku signals become more favorable, and you're also able to hold on to your shares when the market is about to go your way. So Ichimoku users do not simply react to crossovers made by moving averages or signals given by indicators like the MACD or the RSI. Ichimoku users are able to plan ahead and find trades that are likely to bring profits based on the strength of the signals on the Ichimoku chart. Let's go to the next chart. Let's dig deeper into the signals that led us to believe that MCP would trend strongly as it did for the past month. So I will draw the box just to show you which part of the trend we talked about in the previous slide. But in Ichimoku, we don't draw boxes. We use the Chikou span line as our range highs and lows. Within the consolidation, we see that price had been consolidating above the Kumo. Price had been trending above the Kumo. However, the Chikou span tells us that it was in a sideways trend because it was stuck between this range. Now, when the Chikou span finally broke out of its range, we know that the trend is about to shift from sideways to up. The Chikou span represents prices 26 periods back, so we count forward just to reverse engineer to know at what price MCP was when the Chikou span crossover happened. This was this candlestick. 1, we count 26 forward. Now this candlestick was what told us that this was going to be a valid breakout. Notice that this price level is still inside the box because there's a long wick to the left. So we are able to position ahead of other breakout traders because we get a confirmation from the Chikou span. However, note that this was a failed breakout because Chikou span went inside the range, but it finally was able to bounce back. It just retested its previous resistance as new support. So this was this breakout candle that corresponded to that Chikou span breakout. Not only did the Chikou span tell you that the breakout will occur, the Kumo twist also tells you that the new trend is about to begin. Now let's go to the candlestick that corresponds to the Chikou span, to the Kumo twist. Now we have the bearish sentiment. After the Kumo twist, we have a bullish sentiment. Now corresponding Kumo twist We count 26 periods back. This was 1. Sorry, let's go back. I have to load them all over again, just to show you where the Kumo twist happened and what price level we're talking about. So this Kumo twist happened at this price level. That was the same bar, that number 26 bar. That same bar that signaled the Chikou span breakout was the same bar that started the Kumo twist. Since it made higher highs, price made higher highs, then the Senkou span A, which is computed as the average prices over the past 26, average of the high and low for the past 26 days, tends to shift upward because you now have a new high. Because the Senkou span is based on the highest and the lowest for the past 26 periods. So if you get a breakout, it gets a new high to use in its computation, which results in a sloping up of the Senkou A. So let's go to another case study. We have PNX. Now PNX is on a strong uptrend. So what are the conditions for a successful breakout? First, there was a Tenkan-sen crossover at number 1. Second, there was a Kijun-sen crossover in number 2. Third, that is a Chikou span crossover. Fourth, we have the Kumo breakout, where price broke above the Kumo. 5, we have the Kumo twist. Notice that while prices were still at its lows around the 580 area, the Kumo twist already warned of a change in sentiment from bearish to bullish. So you would have been able to speculate on this because all 5 bullish signals were present on the chart. Since you have all 5 bullish signals and then you get a Kumo twist, you know that this is going to break out. And you know ahead of time that this will happen. We count 26 days periods backward. This happened when the price was at 590. We would have been able to buy PNX at this time because the Kumo reassured us that we are going to go on a strong uptrend. So that strong run up to 7 happened and then it consolidated. These are the consolidation areas defined by the Chikou span and the prices. And then a Chikou span breakout occurred. Notice that Chikou span more clearly shows you the supports and resistance because it's a plain green line. Because prices tend to make long wicks upward and downward, so the ranges may not be as well defined. However, the Chikou span tells you the ranges based on the closing prices. So it made a breakout. And then it consolidated again. Then made another breakout. So every time Chikou span breaks above its range, you know that it's going to be a strong breakout. Currently, PNX is still trending strongly above its Tenkan-sen line. So this was the breakout candle that corresponds to the Chikou span breakout. Now let's go to another. Let's do a case study on MRC. The order in which signals occur is not that important. In this chart of MRC, the Kumo twist happened here Since the Kumo is plotted 26 periods ahead, we count back and see that the change in sentiment occurred when MRC was at 152. Imagine being able to buy MRC at 152 when the recent high was at 48. You would have been a triple bagger. This was the Kumo twist. And then a Kumo breakout happened in number 2. Then the Chikou span broke above the price in number 3. In number 4, the Kijun Sen crossed above the price. Number 5, the Tenkan Sen crossed above the Kijun Sen line. What do you notice about these elements or these components? The signals happened above the Kumo. These are all strong bullish signals. So since 2, 3, 4, and 5 happened above the Kumo, then we have strong bullish signals. True enough, the strong move happened after these signals occurred. Now let's do another. The price is consolidated within this price range, and then Kumo Chikou span breakout happened. And then another breakout. So let's go to ICT. The uptrend for ICT is in progress. The Kumo twist happened at 75.20. The rest of the bullish signals. In number 2, we have the Kumo breakout. In 3, we have the Chikou span crossover. In 4, we have the Kijun Sen crossover. In 5, we have the Tenkan Sen crossover. Then we find this Chikou span in a range. Price broke out above that range. Now here are other case studies. We have B. So you must be able to spot all these signs so that you will be able to prepare for strong moves. So if the crossovers happen above the Kumo, then that's a more favorable setup to enter. Choose the ones signals are stronger. Doesn't just because the crossovers happen, you'll get into it. You have to find the strongest signals happening in a chart. So this Kumo twist happened at 72. And then a Kumo breakout. A Chikou span crossover. A Kijun Sen crossover. Again happened above the Kumo. And the Tenkan Sen crossover that also happened above the Kumo. So 3 of the elements have strong bullish signals. 1 had neutral bullish signal inside the Kumo, number 3. That is a neutral bullish signal. Sorry, that was supposed to be pointing to number 3. Made a mistake in plotting that. But these are strong bullish signals above the Kumo. Then you have a weak bearish signal above the Kumo. This was the cross of the candlestick below the Tenkan Sen line. Let's go to RCB. Again, you see that common characteristics of strong breakouts. There's a Kumo twist in number 1. Kumo breakout in number 2. The Chikou span crossover. The Kijun Sen crossover in number 4. And the Tenkan Sen crossover in number 5. All these happened on top of the Kumo, resulting in a strong price move for RCB. Now let's go to our next. We have CPM, Kumo twist in number 1. You have that Kumo breakout in number 2, the Chikou span crossover number 3. Sorry, in number 2 you have the Kumo breakout in number 4 and 5. You have the Tenkan-sen and Kijun-sen crossovers. These are strong bullish signals. Number 4 was the Kumo breakout. Number 2 was the Tenkan-sen crossover. And number 5 was the Kijun-sen crossover. Now the problem with CPM is that it tried to break out above the Tenkan-sen, but it made a failed breakout because it went below that Kijun-sen, that Tenkan-sen line. So this breakout failed. We'll see what happens in the next few days. Currently, this is still in a sideways motion because sideways trend because it went back inside the Kijun-sen range, the Chikou span range. However, this is still bullish as long as it's above the Kijun-sen line. So these 5 conditions were met. The 5 signals happened, and 3 of those happened above the Kumo. Number 5 was a weak bullish signal because it happened below the Kumo. Now let's go to another case study. You have 80. This is a bearish crossover. You have the bearish Kumo twist. And then we have a Kumo breakout in number 2, where price broke below the Kumo. In number 3, we have a Chikou span crossover, where the Chikou span dropped below the price. This is bearish. 4, you have the Kijun-sen crossover, where the price broke below the Kijun-sen. 5, you have the Tenkan-sen crossover, where the Tenkan-sen crossed below the Kijun-sen. These were weak bearish signals. It happened above the Kumo. Thus, the downward action was not that strong. Currently, it's still moving sideways. It did not result in a strong bearish action, but it is still on a downtrend. PXP, as mentioned earlier, one of the great things about Ichimoku is that it could see into the future. It is able to warn you of future trends. Ichimoku is able to catch wave 3, or the most profitable part of the trend. To Elliott wave traders, wave 3 is the best part of the trend because it is a very strong price action. Now we see some bullish signs that tells us that PXP was about to explode in May 2016. There were 4 signs. First was this Kumo twist in February 2016. The second was the Chikou span breakout from resistance. The third was the bullish Kumo that happened 26 periods ahead. You see a strong support in that Kumo. This is a very thick Kumo at that time. It just doesn't look thick right now, but because there are bigger Kumos above. But at that time frame in May, this was a thick Kumo support. And then in number 4, we have the Tenkan Kijun crossover. After these early warning signs, PXP surged from 116 in January 2016 to 493 in May 2016. But look at that wave 3. It started in May and ended in May. So within 1 month, you get a strong move upward. You may not have been able to enter at 116, but if you were able to enter at that strong Kumo support area at 220, then it would have still been a very good gain from 220 to 493. It's more than 2%, 200% gain. Now, this Chikou span also warned us that prices were going to reverse to the downside because price broke below, was not able to break above the previous high of the Chikou span. The result was a downtrend, and now PXP is back at the 3 peso area. Now let's talk about some trading strategies that we are able to use using Ichimoku. Now, we are able to identify the maximum price potential of stocks using the monthly chart. At this point in our webinar, you already know how to identify potential winners and how to assess the strength of each Ichimoku signal. As a bonus, you're also provided with the timing of such moves. Logically, those with stronger bullish signals are likely to be more successful trades than those with weaker signals. Out of so many potential trades that you might be able to identify using the Ichimoku signals, it would be useful for you to know which ones are worth your time and effort. This is the reason why you should be able to identify the maximum potential price targets. You want to be able to catch the meat of the trend and avoid selling too early. But knowing your potential selling point, you would be able to define your risk-reward ratios to identify or to determine if your trade is worth your while. One caution, however, is that we are discussing maximum price potentials and not absolute price targets, because sometimes prices fall short or sometimes prices exceed estimates by a few ticks. So we have a theoretical price target to work with. It may or may not get there, but we have at least a guide for us to follow. So these price targets are possibilities and not certainties. Now, to identify maximum price targets, we use the monthly charts. We previously discussed that prices always tend to go back to equilibrium. What are these areas of equilibrium? 4 of the Ichimoku components are measures of equilibrium. The Tenkan-sen measures equilibrium over the past 9 periods. The Kijun-sen measures equilibrium for the past 26 periods. The Senkou-A measures equilibrium between the Tenkan and Kijun for the past 26 periods. The Senkou-B measures equilibrium over the past 52 periods. So what does this mean? Prices will tend to reattach or return to these lines to restore equilibrium. Therefore, these lines could serve as price targets. While they are also support levels, we will focus on these lines as resistances for this part of the lesson. Of all the Ichimoku lines, the strongest is the Senkou-B line because this represents longer time periods. Therefore, it is your maximum price targets in most cases, except when price breaks above that line. So this is the maximum price target. It's a Senkou line B, except when price breaks above that line. If price is still below the Senkou B in the monthly chart, then that is your target price. It is often flat, and a flat Kumo, as we learned, is a magnet to price. Now, there's a different scenario if we have a pink Kumo. Currently, we're talking about violet Kumos, where the Senkou span B is above Senkou span A. Now, look at this MCP chart. The Senkou B served as this resistance and as its price target during its run. And therefore, this is your potential target price. When price hit Senkou B at 48, it dropped back down. The Senkou B was moving downward as price moved up. The area where the price hit the Senkou B is your strong resistance and is therefore your price target. You see that there's not an absolute price. There's no absolute price target because the Senkou B also adjusts as price moves up. You see that the Senkou B was moving downward as price was moving upward. The area where they intersect or where they meet becomes your strong resistance or your price target. That is the encircled area right there. So while the theoretical target for MCP was the highest level of the Senkou B, which was at 60, the price target adjusts with the movement of the price because the Senkou B is merely a reflection of price action. So at the 48 area, there was a price rejection. So I would like to illustrate how prices also reacted to other Ichimoku lines on the way to our price target of 48. In number 1, the Tenkan-sen served as resistance to price, so price dropped back down after hitting that Tenkan-sen line. In number 2, price was rejected by the Tenkan-sen and then dropped back down. By the Kijun-sen. It was the Kijun-sen and the Tenkan-sen at the same level at number 2, and price was rejected at that level. In number 3, price broke above the Senkou span A. In number 4, that Senkou span A was retested as support and was able to bounce off it successfully. In number 5, price broke above the Tenkan-sen and Kijun-sen. In number 6, this Tenkan-sen and Kijun-sen was retested as support. Price was supported at this level because there was a strong price bounce from 34 cents back to 38 cents at the close. So each Ichimoku line served as resistance on its way up, and once Kijun-sen is broken to the upside, we know that the next target is the Senkou B. In MRC's case, where price and Senkou B meet at 48, that served as a strong resistance. Now in this chart of IS, now we're always talking about the monthly chart from this point on, from when measuring price targets, because we want to know the maximum price target for the run. So we see that the Kijun-sen is the strongest resistance at the 43-cent level. This is what price hit and then dropped back down. Notice that the Kijun-sen is also at the same level as the Senkou span B line, which was parallel to the Kijun-sen line. Now, what is the price target in this chart? If you would notice in your GoToWebinar dialog box to the right, there's an area which says type question here. You will be able to ask me questions in that area. So if you have chart requests later on or any inquiries, you will be able to type your questions there. So what is the resistance of Bell based on the monthly chart? Can anyone guess? The resistance is at 470. So our assumption is that price will be rejected at that level because it is a strong resistance. Where you find, what do you find at 470? That is where you find the Senkou B. Now, notice that on its way up, price was also rejected at the Kijun-sen level. It served as a resistance. Once broken, it is able to target the next strong resistance. So after that break above the Kijun-sen, we know that the next target is the Senkou B. Now here's the chart of Bloomberry. The price target for Bloom is the Senkou B. Here's that area. I would like to recall what happened to MRC. The Senkou B was also moving down. Therefore, as price moves up and the Senkou moves down, your price target is the intersection between the two. Notice previously that Bloom tried to break out of resistance but failed. It tried to break out above the Kijun-sen resistance but failed. It made another run, tried to break. Now it's trying to break above the Senkou A. The Senkou A is located at 13 peso area. If price is able to break above that, then you know that it will target the Senkou B area soon. So if you have Bloom at the moment, note that your closest resistance is at 13. Now we have PXP. This price target seems outrageous. Nonetheless, it's doable because PXP went from a price of 45 pesos years ago. Now this resistance, current resistance is at the intersection or the confluence of Tenkan A and of Tenkan-sen and Kijun-sen. PXP needs to break above the Tenkan-sen at 4 pesos, the Kijun-sen at 4 pesos and the Tenkan-sen at 6 pesos. If this happens, the next resistance is at that 25 peso area. Sorry, the 6 peso area is the Senkou A area. The Tenkan-sen and Kijun-sen is at the 4 peso area. Your price target will be the Senkou B if that Senkou A is broken to the upside. Again, not all are able to reach these price targets within the Kumo. Some are unable to reach the Kumo top. Others break above the Kumo, but for example, for IMI, it is not able to reach its price target within the Kumo, but it still has a chance to reach that price target only on a longer time frame. So some stocks reach the Kumo top faster than others. As I said, these are just potential targets. These are theoretical, based on our theory that prices tend to return back to equilibrium. Melco Crown seems to be following the script. It shows a price target near 12 pesos. It already broke above the Tenkan and Kijun-sen lines in the monthly chart. The next resistance is the lower area of the Kumo or the Senkou A, which is at 10 pesos. If it breaks that, the target is at 12 pesos or the Senkou B. Now Brown already broke above the Kijun-sen and is now faced with this Senkou A level. If it breaks above that Senkou A, the next target is Senkou B at 190. Now for Apple or Apollo Global, the resistance of the Tenkan-sen is already broken in the monthly chart. Its next hurdle is the Senkou A. So let's go back to that. So the price target is at the Senkou B at 60. So the current resistance is at 49, which is the Senkou A. In this ACR chart, the same theory apply, but notice that the Kumo is already pink. So your first target is the opposite. Your first price target is the Senkou A if Kijun-sen breaks. So you have the Kijun-sen, you have the Senkou A, and you have the Kijun-sen as the first target. The next target, this is the Senkou B. After that, the target is the Senkou A at 190 levels. Now, we already discussed how to find price targets using the monthly charts. We are talking about the maximum price targets. Of course, what the stock does in between the daily and the weekly charts is another story. As you know, prices don't go up in a straight line. So even if we have a high price target on the monthly, it could take some time to get there, and it will take a lot of corrections and consolidations before it finally gets to that point. So if you plan to enter based on the monthly chart, you find that there's a good price target for this chart based on the monthly chart. You have to consult the lower time frames, the weekly and the daily charts, to know the proper area to enter. You can't just enter at any level within the monthly chart. For example, you see that price target for BXP is at 20 pesos. You enter wherever because it's going to go to 20 pesos anyway. It's going to be a difficult trade if you enter at the wrong price. So you have to go to lower time frames, for example, the daily chart, and find out the support levels in the daily chart and enter there. So you don't have to lose a lot of money if the trade goes against you. Now, that's one way of setting price targets. Other people use Fibonacci levels. Others use moving averages. We'll discuss all that combinations of other tools with Ichimoku next meeting. So for now, we will focus on Ichimoku strictly. Now, one of the trading strategies to employ in using Ichimoku is trend following. Ichimoku is best for trend following because it was designed to follow trends. It is not very effective for use in sideways markets, but it is a very good tool for trend following. For example, in ICT, we already discussed the breakouts that we saw in ICT. Now, how do we follow this trend? There's a very simple rule. Just hold unless the Kijun-sen line is broken. Now, there are two kinds of traders. One trader is the momentum trader. The second trader is the position trader. The hybrid, or the trader in between those two, is called the swing trader, who takes advantage of the ups and downs within the trend. Now, let's talk about only these two types of traders. The momentum trader, who takes advantage of strong momentum, and the position trader, who just wants to hold his position as long as it does not break below critical support lines. Now, a momentum trader would use the Tenkan-sen line as its support level. This is the pink line. If price trends above the pink line, it has strong momentum. Therefore, if it breaks below that line, the momentum is slowing down or the momentum has waned. Look at this chart of ICT. Prices were trending above the pink line until April, and then it went below that pink line. This was your momentum trader's signal to sell, because this means that he would have to wait a long time before realizing profits because price lost its momentum. We say that this is the momentum line because it is the average of the 9 days, a very short time frame. However, the Kijun-sen line is the guide used by precision traders because this shows the medium-term trend, or the trend for the past 26 days, or not days, but 26 periods. No? So a position trader will not immediately sell once price breaks below the Tenkan-sen line. he has a longer or has a higher tolerance for pain. Therefore, as long as price is still trending above the Kijun-sen line, he'd continue to hold. His advantage is that he won't get whipsawed easily out of the trade. So whereas the medium-term trader was out of the trade at the cross below the Tenkan-sen line at around the 80 levels, the position trader is able to ride longer. The price is now at 97 peso levels and is still holding it. So his realized gain might even be higher than the momentum trader because he did not commit any mistakes in this trade. Prices were able to bounce off the Kijun-sen. Imagine if he held this from 72 and it's now at 97. He would have realized a large gain without doing anything. All he had to do was to watch the blue line. He didn't have to execute. He didn't have to have a headache entering and exiting positions. He just has to stare at the blue line and cut below it. This is a very simple rule. Now look at IMI. Now IMI is following the pink line. It's a strong momentum stock. It went below that slightly. So a momentum trader might have been whipsawed out of the position right there. But if you're a momentum trader in May, this is corresponding to the May 2 candlestick. If price broke below that, and if price goes above that pink line, you should have bought into the position again because it is again above the pink line. So momentum traders follow the pink line, position traders follow the blue line. So again, Mega White, another strong stock. Just follow the trend until it bends. Petron. Now here's an interesting stock because it just broke out. It broke out above the Kumo. Therefore, if you enter at this Kumo breakout, you see a good future ahead because you also see a Kumo twist to the right, and that Kumo is pointing upwards. Therefore, prices will continue to go upward. Currently, Picor is still consolidating within possibly a flag formation or flag pattern. However, it has got strong momentum because it is above the Tenkan-sen line. If you look at historical moves for Picor, it rarely moves, but once it does, it moves strongly. So this is a potential trend following stock. This is Picor. So you just hold this as long as it's above the pink line if you're a momentum trader, above the blue line if you're a position trader. This makes trading much easier for position traders. Now Apple, as I said earlier, it's still not out of the woods. It's still below the Kumo. But if it does break above the Kumo, all you have to do is follow this trend. Now another trading strategy you could use is the bounce play. Like we said earlier, prices always want to go back into equilibrium. Now the Kijun-sen and the Tenkan-sen are both measures of equilibrium. They are both measures of equilibrium, but these are sometimes, price action sometimes brings these two levels apart so that there's a huge difference between the location of the Tenkan-sen and the Kijun-sen line. After a strong run, the Tenkan-sen and the Kijun-sen sometimes get into disequilibrium. Disequilibrium is when these two have a huge range in between them. Now I'd like to call this disequilibrium the C-clamp pattern. This is not my original term. Someone else coined this term. The C-clamp pattern refers to a pattern where prices or the Tenkan-sen and the Kijun-sen are in strong or in a high, are in a huge range between them. Where Tenkan-sen and Kijun-sen have a huge range in between them, therefore forming sort of a C-clamp pattern. Here's an example. After a strong run, the Kijun-sen and the Tenkan-sen will have a tendency to move away from each other. This means that there's a large difference between the 9-day and the 26-day equilibrium. You would see that Ichimoku always wants to go back into equilibrium. So if you have a market like this, there's only one of two things can happen. First, the price could go down to force the Tenkan-sen and Kijun-sen to get closer together. Two, the price moves sideways until the Kijun-sen is able to catch up. So one of two things can happen. Price moves down. This is what is also called a correction in price. The second thing that would happen is that price moves sideways until the Kijun-sen is able to catch up. The second scenario is called a correction in time. So for traders, there's a correction in price or a correction in time. So corrections are healthy things. They restore equilibrium in the market. Now in this chart, you would see that C pattern happening. The Tenkan-sen and the Kijun-sen seem to be forming the letter C. If you look forward and look at the Kumo, you would also find the letter C. The Senkou A and the B are forming the letter C pattern, or a C clamp pattern. The target price for this pattern is the bottom or the Kijun-sen. At this point, where the price meets the Kijun-sen, there is equilibrium. So this is a necessity in all markets. Equilibrium is a necessity in all markets. Now, the C-clamp formation tells you that a correction is about to happen in terms of price or in time. Now, this is already a done C-clamp. The target had already been reached. Let's look at other potentials. Brown. The pattern had already been met in this case. Okay, the pattern had already been met because the price went to the Kijun-sen line. And if you look forward, the Kumo is also making the letter C pattern. Now here are also C patterns or C clamp patterns on the Metro Pacific chart. Notice that when C patterns do not only happen in tops, they also happen in bottoms. For example, in extreme sell downs like MPI, the Tenkan-sen dropped significantly below the Kijun-sen. Therefore, there's this equilibrium between the two. Price just had to rally back in order to meet the Kijun-sen to restore equilibrium. This happened twice in the MPI chart. When prices rallied, the rally was overextended this time. The Tenkan-sen was very high above the Kijun-sen, and it had to correct to restore equilibrium. The target price, once again, is the Kijun-sen. Now, RCB had not yet completed its C pattern. It may complete it with the target price at that Kijun-sen line at the bottom. That Kijun-sen line is located at the 48 peso area. So if it does a correction in price, price will drop to 48. If it does a correction in time, price will move sideways until the Kijun-sen is able to catch up little by little. Kijun-sen may trend up little by little as the price moves sideways. Potential bullish setups. I'd like to show you some potential setups that you might be interested in. I already showed you this one. P-Core is a bullish setup because it just crossed above the Kumo, and the Kumo is pointing upwards. RWM also made bullish crossovers above the Kumo, and the forward Kumo or the Kumo 26 periods ahead is bullish. It's a pink Kumo with a Senkou A above the Senkou B. If you're paying if you're paying close attention to the RWM chart, you may have known that, or you may have anticipated that strong move to the upside because of that Kumo twist that happened 26 periods ahead. PPC is also a strong stock because its price is above Ichimoku elements. Notice that the Chikou span has no resistance above it. It is trading at an all-time high. What else is to stop that PPC from moving up further? MJC. This also consolidating above the Kumo. Tenkan-sen is above the Kijun-sen. The price is above the Tenkan and the Kijun-sen. And there's no resistance above the Chikou span. As if the Chikou span is able to break above its previous high, then we will see new highs for MJC. So, do you have any questions with regards to our webinar? So you can see there's a huge difference between implementing trades using Ichimoku and using other elements. Ichimoku is visual. You don't have to think very much. If you look at the chart quickly, you will be able to see that you will be able to see what the sentiment is and where to cut your losses and where to take your profits. So again, there's a questions, or there's a question box to the right at the go to webinar control panel. You may enter your questions there, or if you have any chart inquiries or any inquiries about the topics we have discussed so far. Next week we will discuss time frames. We will discuss Ichimoku and Fibonacci ratios, as well as divergences in ultimate oscillators. If you want to read ahead, read about the ultimate oscillator, read about divergences, and read about the Fibonacci ratio. So do you have any questions? Again, this session is recorded. I will upload this and give you the links after this webinar. You can email me. I will send the, I've already sent you my email address, I think, using the Simple Trader Yahoo account. No, I use the Ichimoku webinar x@gmail.com. You may email me there. It's Ichimoku webinar x@gmail.com. All of you will automatically be in my Simple Trader Bukaka Premium account, where I will share my charts and trade setups. And we can continue learning using our Slack platform. I will also send you invitations to Slack, where we can discuss questions you may have, and where we also communicate every day during trading time. What else? So while waiting for questions, I would like to show, let's try to look through some charts and find potential setups. I'd like to look at some of the, let's look at the gainers and the losers at the PSC for the past week. Maybe we can start from there. We already discussed ACR, Petron, PPC, Pacifica, MRSGI. Let's look into that. BKR is highly liquid, so I would advise against getting into that kind of security. Often it can make you profits. You can lose profits. It's a hit or miss thing because volume dries up. Today you have a lot of buyers, tomorrow there's zero. So you could easily get stuck into those kinds of positions. If you want to ride it, just for the sake of riding it, just enter very small positions. Do not enter more than 5% of the average traded volume for the day. But I used to trade BKR as well, but it's so hard to get out of that position once you get stuck, because volume dries out. It's traded once in a blue moon. So let's look at MRSGI. So let's talk about target prices first. Now for MRSGI is a relatively new um, stock in the market. It debuted in late 2016. So we don't have the 52 periods for the monthly chart to determine the Kumo or the Kijun-sen or the Tenkan-sen lines. So we couldn't assess the targets based on the monthly chart. We can go to the weekly chart for this because it's a new security. So what do you find in this? Can you tell the target for MRSGI if it is able to break above the Kijun-sen line? So if price breaks above the Kijun-sen line, I haven't been seeing these questions. Okay, I just found your questions right now. Where to plot Ichimoku? Okay, if you have MRS, if you have Maybank or ATR, Make Trade, if you are using Make Trade here, just click on this Ichimoku button at the bottom. That's how you get your Kumos and your Tenkan-sens and your Kijun-sen. Use the default settings. Do not change anything here. These are perfect. Now, if you don't have a Make Trade account, you can use Investograms. This is a free platform. I will make you look at this first because I'm entering my password. All right, let's go back to Google Chrome. Let's go back to the main screen. Just take a look at the charts for Ichimoku. So what do we have? MRSGI. We don't really need volume. So to get the Ichimoku chart, click on this button. Scroll down to Ichimoku Cloud. Click on that. We find the elements drawn automatically. As opposed to Make Trade, which uses violet and orange lines, this one uses red for bearish Kumo and green for bullish Kumo. So what do we find? Let's just change the settings so as not to confuse us. So the conversion line is the Tenkan-sen line. Let's make that pink. Baseline is the Kijun-sen. That is blue. Lagging span is the Chikou span. Let's keep it at green. Leading span is Senkou A. That is violet. Leading span 2 is Senkou B. That is blue. And then the Kumo, how do we change the Kumo here? Kumo, it's pink. Let's try to make it pink, and the other one is violet. The difference is not that pronounced between the Kumos. Let's make it let's make the violet a stronger violet. Okay. So you can see MRSGI is still bearish because it's a new security. Can you see that there's no Senkou span B here yet? The 52 periods is not yet complete. Anyway, so what is the price target for MRSGI? If it breaks above this Kijun-sen line, this is the first resistance, your target is what? This is your first target, right? This is the Senkou A. I think let's just change it back to green because this is even more confusing than using, because the violet and the pink are so similar. The green represents a bullish Kumo. The pink represents a bearish Kumo. Again, this is the Investagram's chart. It's different from the make trade chart. Just customize the colors as you wish. So if you break above this Kijun-sen, which is a strong resistance, your next target is the Senkou B. Senkou B is at 444. If that breaks, this is your next target, the Senkou A, which is at, this is the Senkou A, Senkou B. This is A. The colors are very confusing. This is B. First target is 439. Second target is 480. Your support is now the Tenkan-sen. Do you see this Tenkan-sen line right here? I'm using the weekly chart, and this is your weekly support line. Price must stay above 373 or 376. So that's how you plot Ichimoku using Investagram. This is free, so you can use it whether you have even if you don't have account somewhere else. Parameters, yes, Rosalie, we're seeing parameters. The concept of Chikou span is to define parameters. Will there be specific values to be inputted for the parameters? The parameters are already at default. Here at the, well, some traders change the Ichimoku parameters. I would advise against it because this system was tested by Hosoda for the last 30 years, for 30 years. And he found that pretty successful, at least for him and for the Japanese market who follow most of the parameters of Ichimoku strictly. The conversion line is always the 9-day average, right? So leave it at that. Baseline should always be 26. This lagging span, 26 and 52, 26 days is the lagging span, is a Chikou span. The leading span corresponds to 26 periods as well. Leading 2 is 52. So don't change those parameters. Use the same parameters for higher chances of success. Now, the reason this is 26 and 52 is because Hosoda based it on the trading week and the trading month of the Japanese calendar. That's 26 and 52. Since Westerners have different trading weeks, they tend to change the settings, but I prefer, well, personally, this worked well for me, so why change something that works? What else? Yeah, let's look at other, potential. MRSGI made a very good move. This basic is, this is an if, because you see that on the monthly chart, there is a confluence of resistances at the 30 area. This is where you find the Tenkan-sen and the Kijun-sen line. It tried it once and failed. Second time it failed. The third time it tried, we thought it might be successful because it was able to break above that confluence of resistances, but it went below it. However, the upside is, it is still above the Kumo. So this is an if, because if this resistance between the Tenkan and Kijun-sen is unable to, if price is unable to break above that, then this will go back to its support line at 26. But if it does get above that, imagine the potential. Your next, there's no more resistance above. There's no more Kumo, there's no Tenkan-sen, there's no Kijun-sen above that line. Now look at the Chikou span. This is the reason why it couldn't break out. The Chikou span is hindered by the Tenkan-sen line. Now the Chikou span uses prices as resistance. Also know that it could also meet resistance at the Tenkan, the Kijun-sen, and the Kumo lines. In this area, the resistance was the Tenkan-sen. Previously, it was able to go above that, and then it ended the week below. So let's see next week if this is able to break above that. Your potential is very high for BSC because there are no more elements above it. There's nothing else to hinder price. There's no Kumo, no Kijun, no Tenkan, nothing. Now, one interesting stock is Pacifica. Now, what do we find on the daily chart? The Chikou span is already above the price, so that's bullish. There's a bullish crossover here. Price is above the Kumo, price is above the Tenkan-sen, price is above the Kijun-sen. There's a Kumo twist. Bullish on the daily chart, right? And then you go to the weekly chart. Again, the only resistance Chikou span has is itself. There's no resistance above. Again, it's above the sens, the Tenkan Kijun sens. The Kumo is green. This is a strong support because this is a thick Kumo. There's nothing on top. Now, if you go to the monthly chart, where is the resistance? Here's an example. And you see there's a Kumo twist here, right? Rarely do you find Kumo twists happening in the daily, weekly, and monthly charts at the same time. This is not very common. So you see that twist here at Pacifica. So you have bullish price movements on all time frames, plus price is above the Kumo. There's a Kumo twist. There's a Kumo twist there. There's a crossover here. Remember what we said about price targets? If we were here and Pacifica was able to break above the Kijun-sen here, we would say that the price target is this one, right? The price target at that point would have been 14 cents. But it was not able to break above the Kijun-sen here. Now it failed to break above, so that entire theory is thrown out of the window since it couldn't break above the Kijun-sen. Notice that this is only a valid price target if price is above the Kijun-sen. But it wasn't. So price continued to consolidate. Now it broke out. It is now above the Kijun-sen. Now we'll extend this price level here. This resistance still holds. It is still your target price for the remaining of the run. What do we have here? We have 14 cents. Magic, right? I'll show you another kind of magic. I'd say this is magic because let's do the Fibonacci retracements. We measure from the bottom. Oh, mistake. I'll do that again. Since I want the reverse Fibonacci, this is reverse Fibonacci, so we start from the top to the bottom of the last run. Now in Fibonacci, you can plot from wick to wick or from body to body. When I say body, I mean the body of the candle. You can include that long wick here. But if you include the long wick on top, you have to include the long wick at the bottom as well. Just be consistent. Now, why did I say this was magic? This was the resistance line. This was the Senkou span B extended to the right. So you would find that the same resistance still applies even if prices went out of the Kumo later than expected. For example, here you didn't see the price reach its target at this point, right? Because this failed. So when price went above Kumo here, your target is still the same. But notice, we have the Fibo level here. We'll study more on Fibos next week. But if you already know Fibo, it is quite close to the 50% line. The 50% line is at 15, and our Senkou span is at 14. It's a very small difference. So you know that this is a strong resistance. If Pacifica is able to break out and continue this trend, would be the strong resistance. What happened to MRC was the same thing. If I plotted the reverse Fibonacci for MRC, what do you find? The 50% level is also quite close to that resistance. So Justice, I'm not doing it. I'm not at the right position. I'll delete it again. I plotted the wrong bottom. Here, it's not the 50%, but it's the 38% level where MRC hit resistance. That's where the 38 Fibo is. That's also where the Senkou B is. Senkou A. Sorry, Senkou B. So in the later parts of this lesson, we'll learn to combine Fibonacci with Ichimoku elements. So this is an interesting chart. Pacifica. RLT made quite some noise this week. Why? Because look at the monthly chart for RLT. RLT broke above monthly resistance line. It broke above the Tenkan Sen, broke above the Kijun Sen, and it did all that within 1 week. Or how many days did this happen? It did all that within 1 week. It corrected towards the end of the week, but Monday and Tuesday, it broke above that. So on the daily chart, there's no resistance above. On the weekly chart, there's no resistance. On the monthly chart, your resistance, if you scroll, would be this level. This would be your resistance. Again, this is not a promise. This is just a potential at 107. Also, you see a Kumo twist right here on the monthly chart. We'll discuss more about time frames next week. You'd find that very interesting because only a handful of stocks in the stock market actually have a confluence of bullish elements in monthly, daily, and weekly time frames. These are the stocks which you should be riding. The party seemed to have already ended for MAC. Previously, this is one of those which have a confluence of bullish factors in all time frames. There's a Kumo twist in the monthly. There's a Kumo twist in the weekly. There was also a Kumo twist in the daily. So MAC was very strong, but it entered into a consolidation phase already. So we only look for trades that are already on an uptrend, on a strong uptrend, and not those in consolidation. Don't go into ranges. They are low reward, high risk stocks. Go into trades that are trending. Easier to get out when you make a mistake in a trending stock. It's easier to get out than in a range or in a downtrending stock. What are the other interesting ones? ACR, we already talked about that earlier. LMG, again, this is illiquid, so let's go back to Investograms instead. I don't want to trade this because it's illiquid. There's a bullish twist, Kumo twist, but this is still in a sideways fashion because it is still within the Chikou span range. So if it's in a range, don't trade it. Only go for the uptrending ones. That's low risk, high reward setups. So will there be yeah. So are there any more questions? So I'll send you instructions on how to get your subscription to Bukaka Simple Trader. I will send you an email follow these instructions, and then give me the Bukaka code at the end, and I will subscribe you to my premium account at Bukaka for the next 3 months. That's part of the webinar package. Do you have any chart requests or any questions? It's 11:45. I still have time for a few more. If there's none, then I guess we could end 15 minutes earlier. So I'd like to thank you for participating in today's webinar. I am really appreciative that you're trying to learn new things in the stock market. As we said, the stock market is an area of competition. You're competing with so many other traders, some traders better than you, some traders not as good as you. But the main way in order for you to succeed and to proceed with the stock market and to stay long in the market is to find new ways of doing things all the time. Some people say that if one thing works for you, keep doing it, it'll keep working for you. But it may be true in some instances, and if you've perfected that system. But note as well that you have many competitors against you. There are many traders competing with you. So you have to keep innovating. You have to keep finding better ways of doing things. If that particular trading strategy does not work for you, find new ones. Keep learning new ones. Ichimoku is one of the best ones I've learned so far after studying so many other trading strategies. And this gave me a huge turnaround in my portfolio. So I hope you can keep studying this. There are more advanced topics on Ichimoku. You can study those as well. There's so many resources online and in Google and in YouTube and everywhere else. So I'd like to wrap it up. Thank you very much. So I'll see you next week. I hope you learned something today. Have a great lunch. And goodbye. And thanks to Idea School once again, especially to Chrissy. Thank you and bye. I haven't closed yet. Yes, I will give you a copy of the presentation, Christopher. Thanks.